Investing in funds is the easiest way for you to become an investor on the stock market. It's not just the easiest way, it's also the cheapest, most convenient way for you to invest in the stock market. So today, I'm going to be sharing with you 6 funds that you need to be looking at and investing in towards building wealth. Stay with me. Hello friends, welcome back to my channel, The Bulletproof Life. My name is Ronke Odewumi and I'm delighted to have you here today. As I mentioned earlier, I'm going to be sharing with you the names of 6 funds you need to be looking at buying in order to build wealth. But before I go into the name of those 6 funds, let me give you a quick introduction in case you are wondering, what are funds, why should I be buying funds and all of that. A fund is a basket of commodities through which you can invest in the content of the basket in a large number of commodities. That is what funds allow you to do. It's the easy and convenient way to invest in the stock market because by investing in a fund, you are simply investing in all of the content of that fund. So if a fund is invested in 20 items and you buy that fund, then you are invested in the 20 items within that fund. Easy and convenient. Instead of you having to buy individual stocks and shares, you simply buy a fund and you are invested in all the stocks and shares and commodities of that fund in one fell swoop. It's also a very convenient way to invest. It's a cheap way to invest because you are not paying individual fees on buying stocks and shares one by one, but you're simply buying a single fund and you're paying one fee and you are invested in a large number of things. It's also cheaper because a lot of funds track existing indexes and so therefore they are not actively managed and so you have lower cost, lesser than if you were buying actively managed stocks and shares or actively managed funds like mutual funds. So now, you know what funds are, you should be buying them, you know why they are easy, you know why they are convenient, you know why you should be buying them because they allow you to invest in the whole market, in an easy, convenient way. So let's get right into the names of the 6 funds I want you to be looking at this 2022. The first fund I want you to look at is called the Vanguard S&P 500 Exchange Traded Fund. This is a low-cost fund that is based on the S&P 500. This means that this fund is invested in the stocks that make up the S&P 500 index, which is a US index representing 500 of the largest US companies. What that means is that when you buy this fund, you are investing in the 500 largest companies in the US in one fell swoop. I told you it's easy, it's convenient. The goal of this fund is to closely track the index's return. It tracks the return of the S&P 500 index, which is considered a gauge of overall US stock returns. This fund offers high potential for investment growth. Share value rises and falls more sharply than that of funds that hold bonds because it has a little bit more risk compared to bonds. So therefore, it's a more appropriate investment for long-term goals where your money's growth is essential. You want to build wealth long-term, the Vanguard S&P 500 ETF is the one for you. If you had put in $10,000 in 2016, your money would be worth a little over $20,000 today. That is why you want to be investing in the Vanguard S&P 500 ETF. The second fund I'm going to recommend is quite similar to the Vanguard S&P and is the Fidelity 500 Index Fund. The marker for that is FXAIX. This is an open-ended investment fund which seeks to provide investment results that correspond to the total return performance of common stocks publicly traded in the United States. Common stocks publicly traded in the United States include the 500 largest companies and a little more. This fund normally invests at least 80% of its assets in these common stocks, which I said includes the S&P 500 funds and a little more. So it is the common stocks that are publicly traded in the US that the Fidelity 500 invests in. Its top 5 investments are Apple, Microsoft, Amazon, Facebook, and Tesla. Again, if you had put in $10,000 in 2016 into this fund, your money would be worth a little over $20,000 today. Risk-wise, this is a well-balanced fund which gives returns that are commensurate with a medium level of risk. I am talking about the risk level of this fund because you need to compare your own risk appetite with the risk level of whatever fund you're buying, so that there is no disconnect between your risk level and the risk level of the fund you are trying to buy. So if you are somebody with a low risk appetite, a medium risk fund might not necessarily be the one for you. The third fund I'm going to recommend is a firm favorite of mine. It hasn't performed well in the last 1 year, but I'm still rooting for it. It's the Baillie Gifford American Fund. This fund is a US large cap growth equity fund, which is again benchmarked against the S&P 500. It was the best performing fund in 2020. In the year of COVID, this fund performed. This fund aims to outperform, after deduction of cost, the S&P 500 index, as stated in sterling, by at least 1.5% per annum over a rolling 5-year period. And it was doing well in 2020. This fund invests about 90% of its content in shares of US companies, being those which are listed, incorporated, domiciled, or conducting significant portion of their business in the US. So it's largely invested in US companies. The fund is actively managed, so it costs a little bit more than if it was not an actively managed fund like the Vanguard S&P 500 ETF. However, it's a performing fund. Its top holdings include Shopify, Amazon, Wayfair, and Roku. This fund endeavors to invest 98.5% of its holdings in stocks and then holds the rest in cash. So you need to bear in mind that it's a fund that's heavily invested in stocks, which increases its risk levels. However, I said it has a higher level of risk, but let me tell you why this fund is a firm favorite. If you had put in $10,000 into this fund in 2016, your money would be worth a little over $42,000 today. Multiplied by 4. This fund, Baillie Gifford American, I love it. That is a fund that will have, multiplied your money by 4 if you had invested in it in 2016. If you notice, the earlier funds I talked about, the 2 other funds I talked about, would have doubled your money, between 2016 and today, while the Baillie Gifford will have done what? Done it 4 times. So that is a firm favorite for me. It's not performing very well right now. It's very low. So if you're somebody who bought it last year, it's probably, not looking great for you like right now. But I want you to hang in there. The Baillie Gifford American Fund is a great fund to invest in. The next fund I'm going to talk about is also a Vanguard fund, and it's the Vanguard FTSE 250 UCITS ETF. It's an exchange-traded fund that is invested in the FTSE 250 companies. It employs a passive management or indexing investment approach. Exchange-traded fund on the stock exchange is not actively managed through the physical acquisition of securities. It seeks to track the performance of the FTSE 250 index. This index is comprised of mid-sized companies in the UK. In tracking the performance of this index, the fund attempts to replicate the index by investing in the 250 companies or almost all of those 250 companies within the index, and then holding this stock in the same proportion as the index. So it's trying to be like the index. We're not practicable to fully replicate the index. The fund will use a sampling process. So as much as possible, this particular fund is invested in the FTSE 250 companies. It remains fully invested except in extraordinary situations. This fund is heavily invested in the FTSE 250. The base currency of this fund is the British pound, so it's a fund that is domiciled in the UK. It's not appropriate for short-term investment. Again, we are here for the long term. Income from this fund will normally be paid out quarterly. So this is an income fund. It's a fund that pays out income. ETF shares are listed on one or more stock exchange, and this particular ETF is listed on the London Stock Exchange, which also means that it's easier for you to buy and sell, and you are always aware of the price, as long as the stock market is open. The shares in this fund can be bought or sold on a daily basis, except on certain bank holidays. It can be bought on a daily basis and sold on a daily basis, and is considered to have a risk rating of 6 out of 7, which is somewhat high. Number 5 that I'm going to recommend to you in terms of funds is the iShares Core FTSE 100 UCITS ETF. Now, the fund I mentioned earlier, if you're staying with me, is a FTSE 250. This particular fund I'm talking about is a fund that is tracking the FTSE 100, and the FTSE 100 are the 100 largest UK stocks by full market value. So this fund is an exchange-traded fund, which means it's also traded on the stock market, which aims to track the performance of the FTSE 100 index as closely as possible. It invests in physical index securities. It invests in the 100 largest UK stocks by full market value. This iShares ETF offers flexible and easy access to a wide range of markets and asset classes. It's an opportunity for you to invest in the top 100 companies in the UK. Instead of you trying to buy their shares one by one, £50 here, £100 here, £150 here, by buying this particular fund, you are investing in the top 100 companies in the UK, and this fund will attempt to reflect the returns of the top 100 companies in the UK. It is a passively managed fund because, again, it's tracking an index. So it means that you have lower costs. So anytime I tell you a fund is an ETF fund, it's likely to have lower cost because it's also passively managed. Exchange-traded funds are usually passively managed. So this particular fund I've talked about with you is traded on the London Stock Exchange, and you can buy and sell this fund on a daily basis, and excepting some bank holidays in the UK. This particular fund is suitable for medium to long-term investment. I'll tell you some funds are strictly long-term, but this one is good for long and medium-term investment. You could also buy it for shorter-term exposure to the index, but you need to consider that you might not get a lot of returns if you do it on a short-term basis. But again, it's a fund that pays income quarterly, so you can do it, get the income, and then get out. This particular fund, again, is dominated in the British pound sterling, because it's a fund that's domiciled in the UK. However, it may be traded in currencies other than the British pound sterling if you're trying to buy it from the US and things like that. So the performance of your shares when you want to buy or sell may be affected by currency difference if you're buying from outside the UK. This applies to all the funds that are domiciled in the UK and traded in Great British pounds. The last fund that I'm going to tell you about today is the iShares UK Dividend UCITS ETF. This particular fund focuses on really high dividend paying UK stocks and shares. If you're somebody who is really interested in income from your investment, this is the fund for you. It focuses on UK stocks that pay dividend well, which also means that they are heavy profit yielding companies. So this particular fund focuses on those kind of companies and is intended to pay you dividends from your investments. This fund comes with a 6.6% dividend that beats the UK market comfortably. It's a fund that seeks to track the performance of an index that is composed of just 50 stocks with leading dividend yields from UK listed companies, excluding investment trusts. Its top holdings include BATS, Vodafone, BP, British Petroleum, National Grid, Legal and General Group, Rio Tinto, Imperial Brands, and so on. This particular fund is traded on 4 different exchanges: the London Exchange, the Dutch Exchange, the Italian Exchange, and the Swiss Stock Exchange. So this is a particular fund that, is traded across different places. So if you are in Italy, you are in Switzerland, you are in Europe, you can easily buy this fund in your own currency because it is traded on 4 different exchanges, so you won't have the impact of currency differences for this particular fund if you're in Europe and you're trying to buy this fund, or if you're in a Scandinavian country and you're trying to buy this fund. So now you have the names of 6 funds that you need to be buying in order to build wealth. You have no excuse. You understand what funds are. You know that these funds are easy to buy. It's convenient. A good number of them that I've provided today are exchange traded funds, which means that they have lower cost. You can buy or sell them on a daily basis. You are not waiting to buy or sell. As long as it's a Monday to Friday, you can buy or sell these funds that I have told you about. You know, most of them give you double on your money in a number of years. In 2016 to now is about six years. It's about 6 years. So I mean, that's a fund that's doubling your fund in 6 years. Let's not talk about the BLG fund that's giving you ×4 in 6 years. That's an amazing fund. I'm not saying the BLG fund is constantly going to give you ×4, but it's a high performing fund that seeks to beat the market, and it's beat the market in the past. You know, right now it's not doing really great, and I personally think this is a great time to buy that particular fund. So now you have the names of 6 funds. Let me know which ones you are going to buy in the comment section. Drop me comments. Let me know which ones you are going to be buying. Let me know which ones of these 6 you've already bought. That makes you a queen or a king. But yeah, let me know. Let me know if you bought any of them, and let me know if there are other funds that are not in these 6 that you bought and they are so far performing excellently. We are here to help each other, to educate each other. You know, I'm not the only one that's going to educate you. You can educate me too. You can come to me and say, look, okay, there are funds you don't know about. Okay, let me tell you. And I'll listen and I'll take it on board, and I'll come back and say, look, you are right. You told me about this fund and it's true. Guys, if you haven't subscribed to my channel, I don't even know what you're doing. I don't know. It's like you don't love me. And I know that you love me because you're in my inbox. You're in my inbox. I know you love me. So please, subscribe to my channel. You know, reward my energy. Subscribe to my channel. Let me know that you're here, you're loving it, you're enjoying it. Subscribe. Smash the like button. You know, let YouTube show this video to other people. Don't go and be smashing just, you know, the YouTube video of people that are making you laugh, or the people that are showing you makeup, or the people that are, you know, showing you how to look nice. All of those things are nice, but learning how to invest, how to grow wealth is a good thing as well. So please smash the like button on this video. Let me know that you watched it, you enjoyed it, and it's added value to you. Until my next video, my sweet darlings, please live and have a bulletproof life because you deserve it. Bye-bye.